Hello and welcome to Share Talk. I am Charlie Gibson, and as you will all know, the commodities markets are nothing if not composed of the slings and arrows of outrageous fortune. Now, my next guest is from a company whose share price a year ago was about 30 pence. And then not very long after that, it was about £2.30, and now it's somewhere in between the two. It's around about 60 pence. The company in question is Bellzone Mining, and my guest in this particular instance is its Chief Executive Officer and its Chief Financial Officer, Julian Cheong. Julian, hello, welcome to Share Talk. Thank you very much indeed for joining us. So, quite a bit of volatility there in the share price. Tell us what's going on.
Indeed, it's almost a to be or not to be situation.
Very good. Should we suffer the slings and arrows of outrageous fortune? We take up arms against the sea of troubles.
Indeed. Well, I think I have taken arms against many troubles since I came on board in November 2015. And I think the pertinent question for viewers is likely why is Bellzone where it is, and what is driving the forward expectation. And I would say the following. We did a very successful £1.6 million offering in November last year on the back of signing our updated mining convention in Guinea. And that clearly was good news and enabled us to quickly start on the second and final phase of our ferronickel feasibility study. That's ongoing, and we're in the process of getting a bulk sample over to Mintech in South Africa with a view to sticking it in a prototype smelter and determining what type of product we would have. We already think we will have something like 10,000 tons per annum production, probably in the order of 15% ferronickel, or nickel in ferronickel. And by the end of the year, we should have confirmation of the economics of that project. At the moment, we think that's a net present value of about $100 million. So I think if you step back and said, aside from the illiquidity situation, aside from the fact that AIM has been itself overall a volatile market, what is the fundamental value of Bellzone? I think people who have followed Bellzone since our IPO in 2010 will know that we have 5.6 billion tons of 30% average iron. That's a lot in just one of our two ore bodies. And I think if you took very conservative desktop valuation using an updated BFS model that we have that was done by E&Y in 2013 and diligenced by a bunch of banks, we have something like north of $200 million in value for the iron ore in situ. And that value at the top.
And that compares with your market cap, which is
less than $20 million. So
right.
it's been between $10 and $20 million,
right.
And at the moment it's sort of in between. This is US dollars.
Mm-hmm.
I think just on the basis of our iron ore deposit, we are, in my view, highly undervalued on a desktop basis. If you overlay it with the 100 million odd in net present value for the ferronickel project, then you have another $100 million worth of value. And again, that pushes, the gap even wider. Investors, I think, see that gap. I think many investors in a momentum-driven market want to know, well, that's all fine and good. You are undervalued, but at what stage are you going to really manifest that value? And I think the answer is the time is becoming very close now. And the reason I say that is because, first of all, we are a Guinea play in West Africa. Our entire franchise is in Guinea. Guinea, over the last 12 months, has been extremely successful in positioning itself, both with the IMF and World Bank in terms of getting their institutional support. But more importantly, they have managed to position themselves as the key pillar in China's One Belt, One Road policy. Now, you know that that phrase has been bandied around. It slips off the tongue easily for many people. But I think one thing that people should really take note of is when the President Xi Jinping in China makes a public declaration and personally shakes hands on a commitment, it's very difficult to find any instance where he has not followed through. He is not the type, compared to other world leaders whom we shall not name, who maybe make more blustery statements and airy content. But
just for those who don't know, what is the agreement that China has entered into with Guinea?
Indeed. In September last year, they announced in a meeting between the two presidents a $20 billion US dollar infrastructure loan over 20 years, a 20-year tenor, and specifically backed by three projects which Chinese state-owned companies, three separate Chinese state-owned companies were going to invest in terms of new investments in Guinea, and these are in the bauxite sector. So for those who are not familiar, Guinea is the world leader in terms of bauxite capacity and production, as well as iron ore reserves. And between the two, clearly bauxite is the near-term catalyst and driver of the economy, simply because there is a shortage, according to the Chinese strategic vision. They have cleaned up bauxite and alumina and aluminum production onshore in China because it's pollutive. There are not many other sources of bauxite around the world that are producing in large volumes. Malaysia is not really doing that, again, for the same reasons that it's not so friendly. Guinea, on the other hand, has high-quality bauxite, so the pollution is not as great as it would be anywhere else, and also it's got large volumes of it, and they need to monetize either that or the iron ore to keep the economy afloat. And so the Chinese clearly see an immediate opportunity to unlock that with additional $500 million in an alumina refinery was announced. Just a couple of days ago, another $160 million investment was announced. They have taken over an old BHP franchise, so they're ready to go.
Let's just taking it back from Guinea and,
Yes.
and talking about Bellzone from end. So
Indeed.
what you have is a huge magnetite deposit,
Yes.
which is what 300 odd kilometres from the coast.
Yes, 350.
On the sort of what you might describe as the edge of that, you have a small ferronickel project,
Yes.
but that is the one that's closer to feasibility
Yes.
and development.
Yes.
So what's the next catalyst for the ferronickel project?
Well, you know that nickel is becoming an important element in terms of electric vehicle demand. And
All those lovely batteries.
Exactly, and so inevitably the nickel prices are going to be going up, whether they spike or not. We are beneficiaries of that upward cycle. So I think whereas the 100 million NPV sort of numbers are very conservative at this moment, I think if nickel prices really go through the roof, I think the value of this project increases just exponentially. That's one issue. But what I want to say, Charlie, is the point I was getting to on the bauxite is, while it may appear unrelated to Bellzone because we are primarily ferronickel and iron ore, what we have done in the years since we've listed and been in Guinea is we've spent over $120 million building a port.
Which is your port dedicated to you,
exactly,
presumably for your iron ore.
Exactly, it is.
And fully functioning?
We have used it in the past to make small-scale shipments. So we've shipped up to 1 million tons previously in a couple of shipments, which was done very successfully.
And what's it doing at the moment? Is it sitting there idle?
It is sitting there idle.
Waiting for material to come. So you could rent that port out, you could sell the port, you could, any number of ways you can box and cox out.
So I would say to you that if bauxite is going to be exported from Guinea, it's got to go through some port. At the moment, there is a dedicated bauxite port in the northwest run by CBG, the state-owned bauxite company called Kamsa, and that's working well. Other bauxite production not going through Kamsa is going through Conakry. Now, Conakry is the capital. It's also a container port primarily. There is a bulk capacity, but obviously that needs to be expanded in a large way. Having said that, if you lived in capital and you had a massive bulk port on your waterfront, that's not necessarily the choice
what
thing.
you want.
And so I submit that for Chinese companies in particular, but there is also Alufor and there's also Rusal, who are going to ramp up production, the export bottleneck is going to be the port facilities. And here, Bellzone sits in a wonderful position because, as you say, we have many potential options to monetize this asset. And if I put to you as somebody anxious to get going, that you would save 3 years and save, call it $60 million building your own port, because it's $120 million in a couple of years ago currency. With inflation and everything else, who knows what a port may cost? Assuming you find the right spot, assuming you can get the land, and assuming you do all the right things,
of the other
that's still going to
yeah.
So if you save yourself a headache, that kind of value, let's say even $60 million, that is 5-6 times our current market cap. And so if I were to say to people, well, you can wait for the long-term iron ore story for Bellzone, you can wait for the medium-term or short to medium-term ferronickel upside from Bellzone, which is inevitably there and will come in 12 to 24 months for sure, because the downside for ferronickel is relatively low from our perspective. It's well understood and the technology is proven. But the additional massive upside for other assets that we have, so Conta Port is one. The other thing that we have is our mining convention encapsulates a right to participate in the infrastructure corridor between Conakry and our mine, which is 350 kilometers, as you say. It is on the route to Kalia, our mine. Kalia is in Farana province. Farana province is one of the most politically important areas in Guinea. And clearly, if you're going to spend $20 billion, you would A, build hydro dams and generate power, B, probably build some schools, but most importantly, you would build road and transport infrastructure. If it's not exactly a railway, which may cost too much, it's going to be enhancing the roads and doing different things. And there is no reason why you wouldn't start on the Conakry to Kalia route, because that is opening up one of the most politically important parts of the country. Obviously, if you were to go further along the Trans-Guinean Railway Road and go deeper into Simandou, that's another 500 kilometers, but that comes with time, and 20 billion can go a long way. It may not cost all that if Chinese construction costs are taken into account, as opposed to Japanese or anybody else. Who knows, that can open up another avenue for Bellzone to participate in that infrastructure. It could be anything. We could be a technical consultant, we could be a contractor, we could be part of a financial consortium, we could play any role in that. And even if we don't do anything directly in that infrastructure corridor, and if it were built, we have the right to piggyback on that, and that immediately lowers the cost per ton for any iron ore production we do. So that whole infrastructure plan that is being put in place, we're really well positioned to immediately, in the short term, I'm talking 12 to 18 months, benefit from any movement there. And so I would say, if you met me 3 to 6 months ago, I would say yes, plans are in the making, things are looking good. But today I can confidently sit in front of you and say, this is happening. If you go to Conakry, you can see for yourself the number of Chinese construction firms that are there doing work of all kinds. There is immense interest there. One of the only privately owned bank in Guinea, the Development Bank of Guinea, is a privately owned bank with investors out of Hong Kong and China. So they clearly are focused on the entire value chain, and Guinea is without doubt a key strategic plank in the whole One Belt One Road saw. And so I feel that I can now say to people, we're not just a medium to long term story. We have short-term upside.
So let's just clarify this for shareholders. If I were to ask you to estimate when would be the first positive cash flow that we'll see into Bellzone, what would your estimate be?
If you talk about iron ore, that's a long way off at the moment.
So it's probably ferronickel.
And ferronickel is likely to, well, here's the time frame. We should finish the bulk of the feasibility study this year. Obviously, time will be required to look for financing. It is a maybe $60 to $80 million capex project. Most of the cost is going to be in smelters. We will have 2 smelters, roughly $20 to $25 million each is the cost that we understand at the moment without negotiations. So it's collateral-based financing, as it were.
So end of this year for feasibility. Construction time, 1.5 years?
Not that long, because these smelters are not that big. They're about maybe the size of a big flat, I would say. We need 2 of them. They're containerizable, so they're dumped in a container, shipped to Kalia, and assembled on site with some local building material.
So 1 year construction?
Maximum.
Okay, so that's 2019?
And 2019 is reasonable. I mean, if we move faster, depending on rainy season, not rainy season, we could easily put a plant in, because we don't see much beneficiation upside. So it's going to be a simple crush, screen, and wash process. That's not going to be huge. And in terms of volume, we're talking 10,000 tons per annum. The size, the footprint is not huge. So getting this going is not going to be huge, but not going to be a huge problem. What I said was the other revenue streams could come on quickly. So this year, for example, we found, because
is that the port for these purposes?
Well, the port is one, but just already what's happening is we had Domon assets sitting on our balance sheet at almost zero. We've depreciated this. But because of the uptick in real mining activity today, both artisanal as well as
and these are exploration assets, or
they are
plant?
Heavy vehicles,
right.
Plant, even our diamond drills, which we never thought we would use again. We're finding either...
So second-hand kit, basically.
Yes, exactly. So we're finding either people want to buy them, and that's a smaller proportion, but more importantly, we're finding that we can rent these assets for a fair amount of money, because they are in demand. So in terms of actually generating cash, this year we will be generating some cash. I can't...
It won't cover your costs.
It will not cover our costs, but it's not going to be insignificant. And I think we are about to release our 2017 financial results. Those would be in line with the results previously, but I think 2018 results to be released this time next year, I think you will see the benefit of that additional income stream already in our financials. And so even baseline existing assets, we're starting to see the ability to generate some cash. So it's not positive cash flow, but it is some cash flow, and not insignificant.
It's contributing in the right direction.
Exactly, and of course the port, which I really see will be an important part of this. You know, the size of the contribution to revenue, assuming we don't sell some equity share of it and crystallize that upfront. You know, how much would I charge per ton? Let's say $2 a ton, $5 a ton. The capacity of the port is 4 million tons per annum. You work the math, you know, and it's expandable to 10 million tons per annum according to design capacity. So
I'm thinking $8 to $20 million potential revenue.
You know, I don't want.
And that probably will cover costs.
Well, more than cover. I mean, our annual OPEX is at the moment about 3 million, with feasibility study costs that will rise a little bit this year. But yes, many times over.
So then it starts contributing to your capex for the ferronickel project.
It would, and it will allow us to pay back our loan to our major shareholder. At the moment, at the end of this year, we're talking about 20 million in principal and accrued interest. So that would more than pay off that, get us on a steady state, allow us to invest, or if we were able to finance, then obviously lever up. And who knows how much cash we could generate quickly. But it's a very real story now, because...
So is that the major asset? Is that your lead asset, so to speak, the port?
Yes.
Ahead of the ferronickel, or is it ferronickel and then port?
Yeah, I would say the port is already there. It's already built. There's nothing that needs to be done other than...
So that makes you more of an infrastructure player.
Exactly. And Bellzone hasn't been seen as having an infrastructure angle previously. And what I would say is that, indeed, because we spent so many years and so much money, you know, unfortunately, in the early years, that hasn't been completely a waste. We've ended up with very important infrastructure asset, very important right to participate in further infrastructure development. And all those things are in position to materialize in the short term. You know, we're talking 12 to 18 months, maybe 24 months. And this could be ahead of the ferronickel, which I'm excited about.
Okay, so just to summarize, three big assets. Lead asset is the port, which you built for $120 million. Second asset is the ferronickel, which is a little bit further down the line, but you're in feasibility at the moment, NPV of around about $100 million. And then you've got, what, 5.5 million tons, 5.5 billion
yes.
tons of iron ore in the ground for somewhere in the longer term. Those
Absolutely.
are the three big assets.
And therefore,
your market cap just shy of $20 million.
And all I can say is, if you're looking for a value play, and you're not talking a wait forever value play, I think Bellzone is worth looking at from my perspective.
All right. Julian, thank you very much. I'm afraid that's all we've got time for. Thank you very much indeed. Ladies and gentlemen, that was Julian Cheong, the Chief Financial Officer and the Chief Executive Officer of Bellzone Mining. As you can see, taking up arms against a sea of trouble, and in this case, by opposing and ending them. So thank you very much to him. Thank you very much to you for watching. We'll look forward to seeing you for more opportunities in the financial markets next week. And until then, this is me, Charlie Gibson, signing off. You have a very capital day.